Forex trading is easy, but when people hear that, they get super angry. But it's the truth. What makes it so hard is ourselves. It's easy to learn about the charts, fundamentals, and understand psychology. The hardest bit is mastering your psychology, even in any field that you are, especially in the forex trading field. Welcome back. This is Sloan Trades, and in this video I'm going to be giving beautiful tips on how forex trading can be very easy for you. Stay tuned and we shall go right into it. Now, it is important to stay to the end of this video because I'll be giving down very important guidelines or tips in order for you to master swing trading, day trading, and scalp trading. Let's get right into it. All right, so as I said before, forex trading is easy, mastering the fundamentals and everything. But then the difficult bit is your psychology. So we'll go first from the technicals, which is the understanding the chart, how you need to go about it in order to understand, master, and then trade the chart efficiently as you move. All right, so firstly, I would want to target or discuss with us the technicals now on how you can understand the market structure. For every setup, understanding the market structure is very, very important because it guides you, it gives you a guide in order to know the direction of the market, know where the market is going, whether an uptrend, a downtrend, or a ranging market. Now, there are a couple of things you need to look out for while you are analyzing a chart in order to find your entry, which I would want to start from the market structure now, as we already said. So starting with the market structure, let's get to my directional bias from a 1 week time frame. Okay, 1 week time frame, basically studying the pattern or whatever it is the market is showing at that particular time. And if you look closely, this is the downtrend, and then looking closely into the CRT of this particular pair, GBP USD, we'll still find out that the candle within it is still on a downtrend. Okay, let me quickly zoom out. Find out that within this whole zone that it's been sales, look at the candle, and it's been downtrend, and in between it is where we are going to find our entries. So yeah, this is the first thing. This is very first step. No matter what type of trader you are, a scalp trader, a swing trader, or a day trader, this is the very first step, which is understanding your market structure. Now, if you've understood your market structure, it is imperative to go down to the daily time frame or the 4-hour time frame, depending on the type of trader you are, in order to get your short-term trades, your long-term trades, or your day trades. All right, so let's get on to the daily time frame. Getting out to the daily time frame, basically to mark out my break of structures, change of characters, anything that will signify for me to me that the fractality of the market to the downside is steady or it's legit. All right, so firstly, I'll be looking at daily time frame, and I am here to spot out, okay, where is the shift of liquidity? Where was where's the shift of market structure? Where was swing failure? Basic things that I need to know. All right, so from this particular zone now, we can see that this was an uptrend from here, up, down, up, down, up, down, up, down, and then this is the last low that created this break of structure. Let me remove this thing so it doesn't confuse us. Okay. All right, so we can see that this was the last low that created this break of structure right above here, and you can see as the market swept below that low, keep going down. So yes, this is our indication on a daily time frame that okay, the market has changed. It's now from a downtrend to an uptrend. Then I would want to identify my liquidity zones, which is this point where the market eventually swept. I would like to call it engineered liquidity. and then this point, which is my inducement, and then my premium order block right above here. Okay, so this is the second step in understanding the technicals, which I already said that it is not difficult bit. All right, so thirdly rather, is to go down to the 4-hour time frame to understand key levels, to get the key levels, continuations, reversals, whatever it is you might see. All right, maybe other blocks that the market is looking to mitigate or already mitigated other blocks, and then a transfer of importance from that particular order block to the next. All right, so going down to the 4-hour time frame, you can see that there are a couple of key levels here that the market are bouncing off from. Okay, this is our inducement, which we've already identified, and this is the premium order block, okay, for sales, where eventually there was a swing failure and then a continuation to the downside. We shall get into this very soon. So this was the premium order block, and it has been taken, and every other block here are already invalid because this has been validated and there has been a move already. Okay, so coming back down to the immediate time frame here, that is to identify our key levels. Now you can see that, okay, from here there was a key level at this point, but after then there was an impulsive move, basically an IPA, inefficient price action, right down here. Okay, it does. If you go down to much more lower time frame, maybe like the 1 hour, you can actually spot this very well. But we'll still get down to the 1 hour, so you see this is a change. Okay. All right, so eventually there was an IPA here, and the market came and became efficient in further price actions and then kept moving. But that is still furthermore in the video. All right, so after identify this, I'll just want to mark out the key levels, the bearish key levels, okay, bearish key levels, and then wait for the market to retrace. I like getting my trades from confirmations. Okay, so when I see a first move, I wait for the second, then I target to enter from the third. Okay, so that is exactly what happened here. Took this first one, the second, and then eventually I got in from this to this one and the second one. All right, so the third one is the last very important step. Personally, I like to utilize is the refined entry. Now, in getting a refined entry, I would want to get down to the 30 minutes or 1 hour time frame in order to find substructural movements that can enable me to get into the trade and then have a minimal stop loss and maybe a more wider take profit. That's basically getting a better risk to reward. So getting down to the 1 hour time frame now, there is basic things I'm looking at to get from the 1 hour time frame, and they are firstly the internal or substructural key levels, which from here you can see that, okay, eventually this is what I showed you before. The inefficient price market never came back down to refill this place, but then it continued from this key level, then the other one, and the next. All right, so after this has happened, this was the next break of structure to the downside, and this is the key level that I am targeting to get my entry from. But then I missed this because I was looking for confirmations. I wanted to be sure if the market is going to take this particular entry, and I didn't get into that particular zone. All right, let me delete it so you can see. All right, so I couldn't get in that particular place, and I wanted for the next step, the next entry, and eventually market gave me a second entry at this point. Okay, this. Eventually market gave me a second entry at this point, and here I could get in. Now there are a couple of movements that occurred here. Even after getting in at that point, I could still see more retracements in the market. I got in at this point, setting stop loss slightly above, and then targeting the external range liquidity, that point. Then after then, you could see that there are a couple of retracements in between. As a scalp trader, you could capitalize on those movements. You could capitalize on these substructural, that's using the 1 hour as your higher time frame, and then the 15 minutes, 10 minutes, 5 minutes as your entry point, right? Capitalize on this particular trade, getting down into the external range also. So even after you've gotten this particular point, you could still get an entry from this zone, because this is a break of structure, and from what we said before, for every break of structure there is a corresponding other block. So as this break of structure has actually occurred, you could still get your entry from this zone, which is a very key level here. On a 4 hour time frame, it will be much more bigger. So this particular zone now, this cluster now could serve as our key level in order to get into this particular trade for the next time. All right, so after you've gotten into this one, or probably you missed this one, there was still another entry waiting for you at this point. Okay, so this is a particular strategy or a particular concept which personally I use to scale into trades and build capital. All right, so having broken down the technicals now, I would want to be giving out a couple of tips that can actually help you effectively in your trading. All right, so let me recap now. We said get your market structure, directional bias on a higher time frame, the weekly, the daily, whichever one. Then on the 4 hours, you get your key levels, your break of structures, change of character, key levels, mitigated key level. The 4 hour time frame is actually the best time frame to do that. Then the 1 hour time frame, defined entry, 30 minutes to scale into more trades, 30 to 15 minutes to scale into more trades, make more profits. All right. So having understood this now, having broken this down, I would want to give a couple of tips that can help you while you're taking your trades. Firstly, is if you want trading to be very, very important for you, please write these down, these tips I'm going to say now, and then follow them suit till you become very, very, very efficient. Firstly, is find a trading partner or someone to keep you accountable. All right, find a trading partner that keeps you in check and accountable. Trading in isolation kills consistency. If you trade alone, you will always trade on your own terms, and it can make you very, very inconsistent. So find a trading partner, then trade consistently, analyze the chart consistently. Okay, basically building growth when you are accountable to a particular trading partner. Now, if you don't have a trading partner, get a journal. For every trade you take, journal it, journal it, journal it. Make sure that consistently you are building up on that journal, and then you can go back to it and track your profit, track your growth, your profit, your losses, whichever one it is. All right, so learn from every setup and then journal and come back sharper. For every setup you take, learn from it. What happened, what played out here, which key level was mitigated, which key level was invalidated, where was the liquidity kept, those things. Write down things holding you back and reassess yourself, both psychologically, in risk management, and in your edge. Now, I believe you understand this very, very perfectly, because firstly, you need to reassess. That is the use of the journal. That is the use of the trading partner. You reassess yourself over and over and over again. Another thing is to follow the order flow. The order flow is the market structure. If you trade against the trend, you are going to be losing that particular trade. I will show you an example of a trade that I actually made a mistake and traded against the trend. It was in USDJPY, I think, yes. So this particular pair now, I had already made analysis, and then I was mistaken in the market structure. So I picked this particular zone as my entry. Picked this particular zone as my entry. And as you can see, eventually you already know what happens next. There was a sweep. It swept me completely. Okay, so I wouldn't be going against the trend personally because I've already understood the concept of this particular move, not to go against the trend. So the next thing is on the 4-hour time frame, which is a very key time frame for a day trader. Identify liquidity grabs, identify key levels. Now, if there are liquidity grabs on the 4-hour time frame, they do not confirm a trend shift. Okay, if there are liquidity grabs, let's say there was this particular zone now here, and then the market came and probably took this place out. Sorry. Okay, the market came and took this place out. As it has taken this zone out, it doesn't confirm that it is a change in a break of structure or a shift in market structure. This is a liquidity grab. It's just a sweep, and then the market continues in its particular direction. Okay, so monitor the market's transition from manipulation to expansion, from uptrend to downtrend, so as not to make a mistake when you're analyzing. Now, what you should look out for is the body closing through a key structure. Okay, let's say for example now you are trying to find out if this pair is if this was a breaker structure, if this was a change of character. Identify it the body close to that particular zone, not a wick, because when you go to identify it by a wick, it might just be a sweep and eventually you are getting it wrong at that particular time. So the 4-hour time frame is the filter against noise. I keep talking about this 4-hour time frame. It helps you to, just like, okay, let's say now, just like this 1 hour now, you can see almost every detail that happened here. And you can eventually get confused in picking your order block because you might not really know which one is which one you should pick or not. Then when you get out to the 4 hour, when you get up to the 4-hour time frame now, you can see clearly that there are distinctive order blocks, there are entries that you could actually pick from this particular zone. It reduces a couple of things that are in the chart that might be catching to the eyes. Okay, so please note, liquidity grab equals a trap. If you're getting in at a liquidity grab, you probably will be taken out. All right, so a body close above or below confirms the realignment of an order block. If it's a bullish and then there is a body close above, you are correct in that particular zone. It's a break of structure in that particular trend. Okay, so the 4 hours is institutional time frame where intentions becomes clearer. You could see exactly what the institutional traders are doing at that particular time. So these are a couple of tips that you could actually follow. I hope you actually wrote this down so that while you're making your trades, you can refer back to them and then see where you're going wrong and where you're going right. Thank you for watching this video. And I believe that, okay, before I actually round up, let me give a couple of tips on psychology. Now, as somebody who has been in trading for quite some time, and as somebody who has been tested psychologically, I believe that there are a couple of things you need to know. But psychology, I believe, is not something you can teach. So you need to actually go and read books, make your research, watch podcasts, and eventually, as it goes on, you might actually get good at what you're doing because psychology now. Okay, let me refer some books now. We have Trading in the Zone by McDouglas. Okay, Trading Discipline. You can actually read a bunch of books and then come down to the chart and backtest. Backtest builds consistency and builds accountability. If you backtest continuously and then you eventually see your trades play out, it will help you psychologically know that, okay, yes, I'm getting good at this, so let me keep doing this for quite some time and then I can master this particular edge. All right, so please do well to understand your psychology, how you as a person work. Do not over leverage. If you over leverage, eventually you're risking so much and keeps turning your psychology back and forth. All right, so I think these are a couple of things that you should look out for to make trading simple for you. Thank you for watching and see you in the next video.